Hello and good morning, everyone, and you're very welcome to today's webinar. So for those of you who are just logging on, we have already completed a sound test, and thanks to everyone who helped out with that. So first of all, I want to introduce ourselves. My name is Rachel Hines, and I'm the Marketing Manager here at Thesaurus Software. We are delighted to be joined by Revenue for today's webinar. And I will be passing over the reins to Colette Hayden, who is the Assistant Principal in the Medium Enterprises Division at Revenue. And today, Colette will discuss what you need to know about the Employment Wage Subsidy Scheme. After Colette's presentation, I'll be jumping back on again to talk you through some tips to remember as you return to the workplace. And finally, at the end of the webinar, we will have a questions and answers session where we will answer any questions that you may have. If you have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. Bear in mind that we do have over 1,000 people logged on at the moment, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording of the webinar. So it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources that you may find helpful in the email later today. But for now, I'm going to pass you over to Colette to kick us off with the revenue presentation. So over to you, Colette.
My name is Colette Hayden, and I'm going to talk to you today about the main features of the current Employment Wage Subsidy Scheme, EWSS, effective from the 1st of July 2021, along with recent updates to the scheme announced this week. This presentation is based on the position as of today, and things do change, so you should consult our website. Next slide. Just a quick refresh first of the key features of the Employment Wage Subsidy Scheme, EWSS. EWSS could be claimed by eligible employers in respect of eligible employees from the 1st of September 2020. The subsidy is a flat rate subsidy which is paid based on an employee's gross weekly pay, and this will be covered in more detail in later slides. EWSS is operated through normal payroll and taxation systems, so employers will be required to continue to operate payroll taxes in real time on all gross payments being made to their employees. An employer should register, deregister, or re-register through ROSS. On My Services page, click Manage Tax Registrations in the Other Services section, then click Register or Deregister next to the EWSS. As registration and re-registration cannot be backdated, it's important an employer is registered before the pay date they want to claim in respect of. Employer and employee eligibility and tax clearance will be covered in the next few slides. But a key point, the employer must have a tax clearance to register for EWSS and must retain tax clearance to continue to receive the subsidies. In line with international practice, a list of employers availing of EWSS was first published in January 2021 and will continue to be published quarterly on revenue.ie. In relation to employers' PRSI, while employers are required to report and pay the full rate of the employer and employee PRSI on receipt of payroll submissions, Revenue will apply a reduced rate of employer PRSI of 0.5% in respect of employees for whom a subsidy is payable. Employer monthly liabilities will be revised accordingly, and any resulting PRSI credit will be available to offset against future employer PRSI liabilities. There are safeguards to minimise abuse of the system, and I will talk further about them later. And from the 21st of July, all employers are required to complete and submit through ROSS an online monthly EWSS eligibility review form, but more about this later. Next slide. The subsidy is based on employees' gross weekly wage. The gross weekly wage includes notional pay before the deductions of pensions or salary sacrifice, but excludes any Department of Social Protection benefits which employees may have mandated to be paid to the employer, such as illness, maternity, and adoptive. Where pay frequency is other than weekly, the employer will calculate the gross weekly wage and divide by the number of insurable weeks to a maximum set by the system. There is very good information on this in the EWSS guidance document. If employers are found to manipulate the system by changing pay frequency, pay dates, or altering amounts to maximise the subsidy, they will be liable to recoupment of the subsidy received, together with interest, penalties, and possible complete exclusion from the scheme. EWSS is part of the normal payroll processes for PRSI, PAYE, and deductions, along with payroll being taxed in the live environment. The EWSS indicator involves populating the other payments field on the payroll submission with a value between 0 and 1 to indicate the subsidy request. This will not appear on an employee's payslip. Subsidies would generally be paid within 2 working days, with some minor delays at the start of each month. Where there are multiple employments, each eligible employer makes a claim for the subsidy in their own right for eligible employees. Next slide. For your information, this slide outlines the rates of subsidy payable to each employee up to the 31st of October 2021, which range from €203 per week to €350 per week, but no subsidy is payable if an employee is paid less than €151.50 or more than €1,462 per week. This week it was announced that there will be no change in the Employee Wage Subsidy Scheme for the month of October. This means that the EWSS will continue to operate in its current form during October 2021, so that the main eligibility requirement is a 30% decrease in turnover or customer orders for the full year 2021 compared to the full year 2019. The enhanced rates of support and the reduced rate of employers' PRSI will continue to apply for the month of October 2021. No decisions have been taken as to the appropriate operational parameters for EWSS for the remainder of Q4 2021, that is November and December, and its possible extension beyond the end of 2021. A range of possible options for the future of EWSS is being looked at, and such arrangements will be outlined on Budget Day, the 12th of October 2021. Next slide. As you're aware, to be eligible, an employer must experience a 30% reduction in turnover or customer order values as a result of COVID-19. From the 1st of July 2021, we saw a change in the eligibility assessment period. For pay dates on or between July and December 2021, this 30% test is assessed by comparing turnover or customer orders values for the calendar year 2021 to the calendar year 2019. By extending the eligibility period to 12 months, it ensures a maximum number of employers will be eligible, as many businesses remain closed or limited in their capacity to trade due to public health restrictions in place for the first half of 2021. However, when the resumption of normal trading has occurred, such businesses can potentially generate turnover or customer order values of up to 70% of their values for the whole of 2019, while they are open for the remainder of 2021 and remain eligible to claim the support under the scheme. Next slide. If the businesses were not in operation on the 1st of January 2019, the comparative period is the period from the date of commencement to the 31st of December 2019, where the businesses commenced trading between the 1st of January and the 31st of October 2019. If the businesses commenced to trade on or after the 1st of November 2019, the review is based on projected turnover or customer orders from the 1st of January 2021 or the date of commencement, if later, to the 31st of December 2021, prepared as if COVID-19 had not occurred. Next slide. The requirement for each employer to undertake an eligibility review at the end of every month remains in place. If, as a result of undertaking that assessment, they determine they are no longer eligible, they should deregister on ROSS from the 1st of the following month and cease submitting the EWSS claim. However, if circumstances subsequently change and employers are again eligible, they need to re-register on ROSS before the pay date in respect of which a claim is being made. It is worth reminding everyone that registrations or re-registrations cannot be backdated, so please ensure you are registered before you make wage payments. To assist employers with undertaking this eligibility review, a requirement has been put in place now where employers are required to complete and submit through ROSS an eligibility review form. Next slide. I will now show you a few screens and explain the steps in submitting this initial claim form. The final screens differ ever so slightly from those that I'm using for this demonstration. The first step in the process is to log on to ROSS and select EWSS Eligibility Review in the Client Services section of My Frequently Used Services. Next slide. You will then have to select from 3 options on the screen. Number 1 is New Business. This is to be selected if you have commenced to trade on or after the 1st of November 2019. Number 2 is Registered Childcare Provider. This is to be selected if you are a childcare provider registered under Section 58C of the Childcare Act 1991, which will not be applicable. And number 3 is All Other. However, for employers with more than one business type, the 3 categories listed at the initial stage of the ERF completion, that is, a new business, that which commenced on or after the 1st of November 2019, registered childcare provider, or all others, employers should complete in respect of all others where they fit into the all others category as well as one of the other 2 categories. They should ignore their registered childcare business or new business which commenced on or after the 1st of November 2019. Where employers have a number of eligible businesses, one ERF should be completed with details of all eligible businesses included. New slide. For those that select new business, that is those that commence to trade on or after the 1st of November 2019, employers need to agree to the following declaration by ticking the agreement box. I declare that I have correctly completed this form, which exempts me from the completion of the monthly employer eligibility review screens. For new businesses to qualify for EWSS, that is an employer that commenced to trade after the 1st of November 2019, must, in addition to having a tax clearance for the duration of the scheme, they must also be able to demonstrate that the business experienced a minimum 30% reduction in the projected turnover, VAT exclusive, of customer orders for the 1st of January 2021 or the date of commencement, if later, to the 31st of December 2021, as if the pandemic had not occurred relative to actuals and projections for the same period, looking at the year as a whole rather than on a monthly basis, and to be able to confirm that the disruption is caused by COVID-19. Again, similar to step 3 for new businesses, registered childcare providers are also required to agree to the same declaration. New slide. Step 4 for both new businesses and childcare providers sees employers being directed to the sign and submit section of ROSS, where they will be directed to confirm their submission using their digital certificates. They will then receive an acknowledgement of the submission for their records, which they may wish to print off and keep. We have contacted all new employers via ROSS, advising them of the need to retain monthly eligibility review documentation and that we will be undertaking compliance checks with a number of them in due course. New slide. In relation to all others, there's a bit more involved, as you would expect. New slide. In the initial submission, employers are required to provide details of their actual monthly turnover or customer order values for 2019. Please ensure this is completed correctly, as once submitted, which is step 4 of the process, it cannot be altered. If errors were made when completing the form, employers should contact us through my inquiry setting out the reasons why an amendment is required. New slide. The next screen you are directed to requires actual monthly turnover or customer order values for January to September 2021. Again, this screen cannot be altered once submitted. If errors were made while completing this form, please contact us again through my inquiries, setting out the reasons why an amendment is required. You will see, new slide, you will see this screen pop up. Revenue undertake a systematic check comparing 2019 actuals with 2021 actuals. New slide. If you meet the 30% reduction, you will see this screen with your figures as submitted. However, for businesses which commenced to trade on the 1st of August 2019, the system compares from the 1st of August 2019 to the 31st of December 2019 versus the 1st of August 2021 to the 31st of December 2021. However, all periods need to be completed in the ERF. New slide. Once completed, employers will be required to sign and submit after agreeing to the following declaration, which will be included in the final screen by ticking the highlighted box. I declare that this represents a true and accurate record of actual monthly turnover or customer orders and my best estimate of forward-looking monthly turnover or customer orders projections. At this stage, employers will be directed to confirm their application with their digital certificate. They will receive an acknowledgement of the submission for their records, which they may wish to print off. If employers do not file monthly declarations, they will see a suspension of their EWSS claim, so it's imperative this is given your immediate attention. New slide. By the 15th of every month for the remainder of 2021, employers are required to provide details of their actual turnover for the previous month and ensure their projected monthly turnover or customer order values for the remainder of 2021 remain valid. So by the 15th of October, you will be completing September actual values with projections for November and December 2021. Next month, by the 15th of November, you will be completing October actual values with projections for December 2021, right through to the 15th of December, when the November actuals are to be returned. It is expected that projections for future months have been prepared using a reliable set of budget assumptions and will not change materially between monthly updates. Again, please take care when completing this screen, as amendments cannot be made once figures are submitted, other than projections for future months if necessary. If errors were made when they were provided in a previous month, contact should be made through my inquiries setting out the reason for the amendment. It is important to highlight, if employers do not file the monthly declarations, they will see a suspension of their EWSS claims, so it's imperative that this is given your immediate attention. New slide. Just to recap, you will see that this is not a new requirement, rather an online capture of information you are already required to have as part of the conditions of the scheme. It has been designed to be an aid to employers to ensure they remain eligible and avoid potential for subsidies being claimed in error and potential repayment issues arising. Employers need to ensure figures are to be completed net of VAT. We undertake real-time reviews of ERF and making contact with employers where discrepancies arise, including where employers complete nil for some periods, or where they dampen down projections as the year progresses, as actuals for earlier months are higher than originally expected. I would also just like to remind you that you need to file your ERFs to avoid delays in payment. Firstly, employers need to ensure they file their ERFs by the 15th of each month. The initial ERF completed includes actuals for each month in 2019 and for January to September 2021, and projections from October to December 2021. We continue to see a large number of employers who are not complying with this requirement. We also continue to see employers continuing to submit EWSS claims even though they do not meet the 30% test, and their ERF filed has highlighted this and requested that they deregister and cease submitting claims. I would also like to remind employers of the requirement to maintain tax clearance throughout the term of the scheme to ensure timely payment. And finally, registration and re-registration cannot be backdated So employers need to ensure they are registered prior to the payment and submission dates in respect of the month for which they are claiming EWS or submitting their ERF. New slide. Finally, from the 1st of June 2021, employers now can warehouse overpayments of EWS, which they are unable to repay as a result of the impact of COVID-19 restrictions. Period 1 of the warehousing period ends on the 31st of December 2021. Period 2 runs from the 1st of January 2022 to the 31st of December 2022. An interest rate of 0% applies to warehouse debts in period 1 and period 2. A reduced rate of 3% per annum will apply to period 3, which commences on the 1st of January 2023, on warehouses balance outstanding until the debt is discharged. Employers whose tax affairs are dealt with in Revenue's personal division or business division will have their EWS overpayments warehoused automatically. LCD and Med employers can make an application to have their EWS overpayments warehoused. In such cases, Revenue will make relevant inquiries and request supporting documentation to satisfy itself that a business is unable to repay its EWS liability in making a decision to grant access to debt warehousing. Other tax payments and filing obligations must be kept up to date for the duration of the debt warehouse period and for any subsequent arrangement period to guarantee the reduced interest rates of 0% in periods 1 and 2 and 3% in period 3. Failure to meet the current tax obligations will result in warehouse facility being withdrawn. Full statutory interest will be applied to the outstanding balance from the date of removal from the debt warehousing scheme. New slide. Now that the scheme is well underway, Revenue will be reviewing this new real-time data received and identifying potential issues, contacting employers seeking clarity if required. If we identify high-risk practices, we will contact an employer directly to ensure eligibility and the scheme is not being abused, including through the manipulation of payroll. It is imperative that employers retain records supporting their registration and continued eligibility for the scheme for potential review in the future. New slide. Consequences of the determination by Revenue of abuse of the scheme can result in the complete exclusion from the scheme at an employer level, possible repayment of subsidies received with interest and penalties, and possible criminal prosecution. Our website has a lot of additional information on EWS, including guidelines which are updated as the scheme progresses. I would recommend that employers regularly access these resources to ensure you remain up to date. Thank you for your attention this morning. We will now be taking questions. Any questions?
Brilliant. So thanks, Colette. That was a great presentation. So soon we'll be coming to the questions. So if you do have any questions on Colette's part of the presentation, you can send them in now. But before we get to that, next we have part 2 of today's webinar. And I am going to keep this part short and sweet to allow as much time as possible for the questions and answers. The majority of businesses have now returned to the workplace, some on a full-time basis and others on a more hybrid model of employees working some days from the office and some days from home. Here I want to talk about how Connect can help your business as we return to some form of normality. So first of all, what is Connect? Connect is an optional cloud add-on and it works alongside both BrightPay Payroll and Thesaurus Payroll Manager. The payroll itself is still processed on the desktop application of the payroll software, but the payroll information is stored online on a secure cloud server. With Connect, you can benefit from automated cloud backups and a secure online portal for employers and employees. So to explain it to you a bit better, I'm going to jump into the online portal now to show you how some of the different features work and how they can help your business. So here I am in the online employer dashboard, and you can see I have a notification here on my dashboard where an employee has requested annual leave. So you can set up managers as users on Connect so that they can be responsible for approving leave for employees within their department. And you can also set it up so these managers don't have any access to the payroll data or confidential documents. Before approving the leave request, you'll be able to click into a company-wide employee calendar displaying who is on leave and when, so that you can ensure adequate staffing levels before approving a leave request. So for example, here you can see there are 4 employees on leave on this particular day. Another feature that can help you with returning to the workplace is the Documents tab. With Connect, you can upload any type of document that you want to distribute to your employees. So for example, here I have a company handbook and I have a contract of employment, but you can also upload various policies detailing employee health and safety procedures that all employees must adhere to prevent the spread of COVID-19 in the workplace. You can also send notifications to employees so that they get a notification on their smartphone or tablet when a new document has been shared with them. And you can monitor the date and timestamp of which employees accessed the resource or document and when. So Connect is a great way to communicate with your employees, but also to protect you as an employer. You will have a date and timestamp log as proof that employees have seen those policies, so they can't say that they were unaware of various employee responsibilities. Just to point out a couple of other things that you can do with Connect. Because the payroll data is stored online, you can click into the Employees tab to access each individual employee's profile, which includes their payslips, their annual leave details, and their personal contact details. Next is Reports, and here you can run any type of report that is saved in the payroll software. And this makes it very easy to run payroll reports on the go from any internet browser, regardless of whether you're working from the workplace or from home. And the last tab that I want to show you here is Revenue. And here you can see how much is owed to revenue and a breakdown of how that amount is calculated. So that's the online employer dashboard. But with Connect, employees also have access to a self-service portal, which they can log into on an internet browser or on a smartphone and tablet app. And the app is available to download for free on any Android or iOS device. The employee will receive notifications on their device when a new payslip is available, and they'll also get a notification when a HR document has been shared with them or when an annual leave request has been approved. Within the app, the employee can go into the Documents tab to view payroll and HR documents, including a full payslip library. They can view their past and scheduled leave and request leave in the calendar, and they can view and update their personal details to ensure GDPR compliance. So it's a really powerful app with self-service features so that the employee can do a lot of the admin-heavy tasks themselves rather than coming to you, for example, for lost payslips or leave balance inquiries. So I'm going to finish up there with that. But if you do want to find out more, we do run online demos of both the payroll software and the Connect add-on on a daily basis. So please let us know if you do want to book onto one of those free demos. It's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box and we will try to get through as many questions as possible. However, as I said at the start of today's webinar, we do have over 1,000 people logged on today, so we won't get to every single question, and I see quite a few have come in already. For our questions and answers, we are delighted to be joined by Anne DeLay, who is the Principal Officer in the Medium Enterprises Division and Business Owner of the EWSS at Revenue. And joining Anne today is Audrey Mooney, who is the Customer Support Manager at Thesaurus Software. So Audrey, I'm going to pass it over to you now to read out the questions.
Thanks, Rachel, and good morning, everyone. And from what I can see, most of the questions, if not all, are for you, so apologies in advance. There doesn't appear to be any on the software, etc. So I know this has been covered in the presentation, but just a lot of people asking what's the new criteria or changes from October to December. So just if you want to just recap on, I suppose, what we know.
Yeah, no problem. So we know that the current rates, period high credits and eligibility criteria remain in place until the end of October. We have nothing on what's going to happen between October and December and anything either on the next possible extension of the scheme. The government and the Department of Finance are considering a lot of different options, and the position and their decisions will be announced as part of the budget speech on the 12th of October. So at that stage, we'll know what the position will be from October.
Yeah, we'll all be tuning in on that day.
Yes.
Okay, so the next question there is somebody just asking, is there a delay in EWSS payments? August turnover was submitted on the 1st of September. Last payment received was the 6th of September.
There is no delay at the moment. So there's obviously a particular reason why those payments are being stopped to that employer. So I would ask that they would make contact with the National Employers Helpline, and they will investigate the reason why there is an issue with payments to that particular employer.
Perfect, thank you, Anne. The next question there is, if we qualify for EWSS, can we continue to add staff to EWSS?
Yes, there's no restriction. Yeah, there's no restriction at all on adding new employees to EWSS under the current rules. I know with TWIS it was a bit different. They had to be on the payroll at a particular point in time. With EWSS, they don't. You can continue adding new employees. That's assuming you're not falling foul of any of the anti-abuse provisions where you're replacing one employee with two lower paid employees.
Perfect, thank you. The next question there is, my brother opened his wet bar on the 1st of September. As he is a sole trader, is he or his employee's son and one other entitled to EWSS? He was advised the scheme is not closed, but I don't know if that means now closed or not closed by his accountant.
Okay, so someone who's a sole trader is not an employee of themselves, so EWSS can't be claimed in respect of monies that are drawn from the business in respect of the owner of the business. There are also restrictions on connected parties, which son would be. They would have to have been on the payroll and paid a salary for July 2020. So in a situation like this, it sounds like that individual wasn't on the payroll at that time, so they wouldn't qualify for EWSS either. So while the scheme is open, they just appear to be falling foul of a number of the provisions of the scheme that mean they're not eligible. But any other employee, provided the turnover and the other eligibility employee criteria are met, should be eligible for EWSS.
Perfect, thank you. There's a few of these type of questions in, so I'll try and avoid repeat ones, but an inquiry in from a customer with a large order in November. This would push them above the threshold for being eligible for EWSS for November. However, there's very little in the pipeline for December. My question therefore is, if I'm ineligible for the EWSS in November, can I get it again in December?
Yeah, this comes up a lot, Audrey. I know similar type questions have come up every time that we've presented, and people seem to have this belief that it's a month-on-month eligibility review that needs to be undertaken, but the eligibility is based on the full 12 months. So you look at the full 12 months of 2019 versus the full 12 months of 2021, which will include a high month in November and a low month in December. And it's whether you meet the 30% reduction over that full 12-month period that determines whether you're eligible for the 6 months between July and December 2021. So it's not November versus November, it's the full calendar year. So grand, they might have an increased order in November, but that might be balanced by lower orders for the remainder of the year, meaning that they do remain eligible for November. So it's like I say, just go back and take a look at the eligibility criteria and make sure that you are actually reviewing it and applying them properly.
Perfect, thank you, Anne. You're right. They do come up a lot every webinar we do. So, again, a good few questions just coming in from people for childcare, wanting to know if there's any changes between now and the end of the year. But I suppose we don't know anything, post October. Just a question there. We have a company who opened a second location in March 2020, but operate under the one tax number and are currently claiming EWSS. How should we calculate their 2019 figures as both locations did not operate?
This depends on whether they are separate businesses, separate business divisions in line with the guidelines, the EWSS guidelines, or whether they're all one business division. So if they're separate business divisions, then you look at each of them separately, applying the criteria to each business division separately. If they're all the one business division, then you look at it in totality. It may mean because you have acquired a separate business, which means that you're now doing more business because of an expansion, that you're not eligible, and that's unfortunately the way the rules are written. So see if you do meet the definition of separate business divisions, which may mean that one or both of those divisions would qualify.
Thank you, Anne. Again, a few more of these questions, but people saying, for example, in a restaurant, they've had an excellent summer. How can they possibly predict sales for October, November and December with weather and people reluctant perhaps maybe to dine out?
Yeah, all we ask people to do is use their best endeavours and make sure you have sufficient backup justifying the projections that you've made, so that they, the reasonableness of them. So if we do come and do an eligibility review check, that you can stand over the projections that you made and that they are reasonable.
Great, thank you. Next question, I think there's a few of these as well. Do you still complete the online form monthly when you do register, or do you just have to complete it for when you're registered?
You only have to complete it for when you're registered. So if you deregister, you no longer have to go in and complete it.
Okay, letters received issued from Revenue in relation to the amendment to the PRSI credit. Is there any action needed here?
No, there's no action needed. That was an error in our systems for some employers who made amendments to months that had been closed off. So they made an amendment to their EWSS claim, and we, in error, posted the PRSI credit twice. So basically we just reversed back out the incorrect second posting of PRSI just to bring it back to the correct PRSI credit that the employer was entitled to. We just notified employers impacted that this happened, just in case they did go in and see that there was an additional credit, and then the following day they went in and saw that that additional credit had disappeared. So there's nothing that employers need to do. We're just advising you that there was an error in our postings, which we're now correcting.
Thanks, Anne. Just the next question. We have been denied subsidy on some employees for certain weeks because the employee exceeded the weekly earnings limit. However, in these cases, the employees were in their week of cessation and the payment of outstanding holiday money was the reason for exceeding the weekly pay limit. What is Revenue's position on this?
Unfortunately, because it's part of their gross pay for the relevant week, that it's all taken in as part of the gross pay in that week, then they're not eligible that week.
Yeah, and there's a few questions there around holidays and bank holidays. I suppose it doesn't matter what the payment is for.
Correct.
If it's outside the limit,
yeah.
It's out. Yeah.
Yeah.
Just somebody asking, if an employer performs the eligibility review and realises they are no longer eligible and they deregister, do they need to repay the EWSS claimed for that month also?
You deregister. Okay. The eligibility review is supposed to be done at the start of every month. So if you only performed the eligibility review in the middle of the month rather than at the start of the month, then you should repay the EWSS that you claimed for that month. If you become ineligible because there was, let's say, an extra contract earned that you knew would result in your turnover increasing for that month, which you weren't aware of at the time you did the eligibility review at the start of the month, then you don't need to repay the money. So basically it's make sure, I suppose the message is to make sure you do your eligibility review at the end of every month, or the first day of the following month, to make sure you are eligible for that relevant month, even though you don't have to fill and submit the ERF until the 15th of the month. Is that okay? Is that clear?
Yeah, thanks, Anne. Yeah. Okay. Somebody's just asking, how does a business decide between using customer orders or turnover figures?
That's really up to the company themselves, and the orders figure we see is being used by people who maybe have orders that take a long time to fulfill. So, you know, businesses where you take one order, which is a big value order, but you won't actually issue the invoice until maybe 12 or 15 months after you take the order. So it's really up to the business themselves to decide what's the best for themselves. We don't, like, there's some guidelines on what, you know, what businesses should, or what businesses might use orders in our guidelines, our main eligibility guidelines. I think it's Appendix 2 looks at it. So really it depends on the facts of the business. So take a look at the Appendix 1 to the main EWSS guidelines, and that'll give a bit more detail on what the orders are, and you can decide then what best suits your own business.
Perfect, thank you. Just a few people asking about the childcare business and the ERF. I suppose just looking for confirmation that they only need to do it once.
Yes, that's correct. You go in and you do it in the initial screen, and there's no requirement to do it anymore.
Okay, and again, just somebody saying they deregistered in June, so do they have to do the ERF? So they don't.
No, that's correct.
Somebody's asking, how can companies access previous submissions? I think they may be talking about the ERF.
I'm not aware of that, Audrey. I'll have to look into that.
Somebody's just asking, if tax clearance is rescinded for a few weeks, once the business has tax clearance active again, would they be entitled to receive the subsidy for the weeks that the tax clearance was not active?
Yes, they are. We did a refresh of tax clearance for some recipients of EWSS and CRIS in the middle of September. We had made contact with all those taxpayers, definitely twice, if not 3 times, before the refresh was done and the tax clearance was rescinded. People can go in and amend their filing and payment position to ensure that they now qualify for tax clearance. Once they get tax clearance, they make contact with the National Insurance Helpline, who will ensure that the monies that were held while they were rectifying their tax clearance position will then issue.
Thank you. So somebody's just saying, when completing monthly actuals and submitting, there is no confirmation communication on ROS. Therefore, it is not possible to review and confirm that revenue are actually in receipt of an eligibility review or revenue planning to correct this omission and send confirmation on receipt of valid ERF on the ROS inbox.
I'll take that away and I'll consider that, Audrey.
Perfect, thank you very much. Somebody's just asking, Anne, I think there was a mention in the presentation of an EWSS overpayment, and they're just wondering, how would an EWSS overpayment occur?
It might be the case that someone made an EWSS claim and then decided actually they weren't eligible, so they come back and they input or they submit revised payroll where they remove the EWSS claim in respect of one or all of the employees. They would have received the EWSS when the initial claim came in. Now that the new claim comes in and excludes certain employees, there's an overpayment of EWSS to that employer. It also would arise if we do an eligibility review check and we determine that actually the employer isn't eligible. So in that instance, they would have claimed EWSS when they weren't entitled to it.
Yep. Thanks, Anne. Somebody's just asking, how do you deregister from EWSS?
You do that through ROS, through the Manage My Tax Registrations tab in ROS.
Okay. Sorry, I'm just trying to see what other questions we haven't. Okay, so somebody's just asking, is the EWSS backdated if the company failed to process the eligibility review each month? So if they do it, will they get that payment?
So is this because the ERF was filed late, Audrey, or is it that? So yeah, if an ERF, if it's filed late, we do release the payments that have been held, provided they don't breach the 30% threshold.
Thank you. Somebody's just asking, will there be an overall compliance check of EWSS as there was with TWIS?
So with TWIS, every recipient of TWIS was subject to a compliance check. We're only contacting employers where we have concerns around possible eligibility, because we review the ERF with our VAT data, and we review, basically sometimes we also just look at the VAT data 2019 versus 2021. We also, so basically we take a review of the ERS as well that come in to see, are there some where the turnover for a particular month is like an outlier where it looks questionable, maybe where we see a dampening down of projections as actuals for earlier months are higher than originally anticipated. So we will be contacting basically employers where there are risks attached to the employer, and possibly some other randomly selected employers, but not an overall everybody being contacted.
Great, thank you, Anne. This question for us, you might be happy to hear. So somebody's just asking why on draft payslips with a pay date for the 1st of October is EWSS not appearing. So I suspect that it's because they haven't ran an upgrade. I suppose, Anne, like yourselves, we were expecting changes from the 1st of October as previously announced. So we did stop it in the payroll software because we weren't aware of what those changes were meant to be. So when we got confirmation on Tuesday, we released an upgrade. So there should be an upgrade there for you, and if you run that, then you'll see that the subsidy is appearing for you. A lot of these are kind of similar questions that we've already touched on.
Yeah, I just, while you're finding the next question, it's actually quite surprising, Audrey, that we still have over 9,000 active claimants of EWSS who haven't filed their ERFs for July, August or September. So yeah, it's quite high. I was surprised that it was still that high. So I just would really encourage people just to make sure you do file them on time, because you will find a delay in your payments if you don't file them.
Somebody's just saying, if a company ceased on the 30th of September and set up a new company on the 1st of October, but the previous company is not completely shut down yet, there's still a few employees left, can they continue to apply for EWSS until the company is fully shut down?
That's quite a complex query, really, Audrey. I think that person should make contact with us directly, and we can look at the circumstances. It's not, it's not an easy question. There are a lot of different issues that could arise that would, determine whether they should continue claiming or not in respect to those employees.
Thank you. There's just a few people saying that they joined late and they missed what's happening for October. So I suppose just to confirm, Anne, that October is as per the previous months, and I suppose we don't know yet what's happening post-October.
Yeah, that's correct. It'll be part of the budget speech. I think he wants to maximise the number of people maybe listening to him on the 12th of October.
There hasn't been much in the way of payroll in the last few budgets, really. There was a time when we used to be glued to it on budget day, but this year I think we will. Okay, so somebody's just saying, client never unticked the EWSS button from February on their payroll, but should not have claimed it. Can they just repay the EWSS that they received? So I presume you need correction submissions here, Anne.
That's correct, yes. Just do a resubmission of the payroll with the EWSS box unticked just to create the liability on our systems, and then the repayment can be done through RevPay.
Perfect, thank you. There's questions here a couple of times as well. Actually, do I include the amount of EWSS received as income when recording income figures?
No, the EWSS isn't included as part of turnover when you're inputting turnover figures. That's just to avoid a situation where including it makes you ineligible and excluding it makes you eligible, which could potentially happen, so it's not included.
Perfect, thank you. Somebody's just asking, where do they see the employer PRSI refund or reduction, so the PRSI credit?
That's part of your monthly, that's shown as part of the monthly statement, and if you look at the guidelines again, there are screenshots that actually set out where you can see that.
Thanks, Anne. I think, being honest, we've covered most of the questions there. There's a few around, new businesses and stuff, and we've covered a couple of those. So I think, yeah, that we have covered most.
Okay. You can always send extra ones on, Audrey, if there's ones in particular that you think warrant consideration.
Brilliant. Thanks very much, Anne.
Great. So I think we'll finish up there for today's webinar. So thanks, Audrey, for managing the questions, and a massive thank you again to both Colette and Anne, who joined us from Revenue for today's webinar. So as we've mentioned, we will send an email to everyone later today with a link to the recording of the webinar and a copy of the slides as well. So thanks to everyone who joined us for today's webinar, and we're glad to help, and we hope you found the webinar useful. Thank you. Bye.
Thanks, everyone. Bye-bye.